we're going to get stuck into cryptocurrency. Some of you may remember from last time out, Luke Froehlich from Fidelity, head of digital asset solutions. Luke's back with us. Hello, Luke.
Hi, Dan. Hi, Justine.
And we've got Justine Randall from Tatton Asset Management here with us. Hello, Justine.
Morning. Morning.
Now then, folks, we want your questions on all of this. We're going to get stuck into whether or not we're moving towards cryptocurrency being mainstream at all. But before we do, Luke, give us the high-level reintroduction. What exactly do we mean when people talk about crypto assets?
Yeah, so I think the best way to describe them is to talk about digital assets, because ultimately all this crypto asset, cryptocurrency, they are just one type of digital asset. They are secure by cryptography. And one of the characteristics is that they run on a decentralized network. So they run on a network of computer. So you don't need one central authority like a bank or a government in the middle. Transaction can happen peer-to-peer.
Okay.
Is that enough?
That's as good a start, I think. That's as good a start. And how far off do you think it is that these assets are moving beyond the, I guess, the individual speculative user into being a mainstream asset?
Well, I think we're still probably a few years away from cryptocurrency establishing themselves as a mass product, someone that anybody is going to have in his portfolio. There are a few of them that everybody has heard about, the Bitcoin, your ETH, that have established themselves as the benchmark. They represent also about 60% of the market. So they have very different characteristics than the long tail of cryptocurrency. There are about 20,000 of them. So you can imagine that in the current environment, a lot of them are probably going to disappear, and people are going to be looking for digital assets that have real use case in the real world, and not just an asset or tools that you can use for trading.
Okay. Justine, how's your portfolio of NFTs looking?
Well, if I had one, Dan, I could give you a better answer on that. But I'll be honest, for the team and I at Tatton, this was an area of significant discomfort. And we've been receiving more and more questions from our advisors about cryptocurrency, about Bitcoin most specifically, but also around the whole use of technology. So including the metaverse and all of the other NFTs and all the other funky things that come alongside. So we've been forced to take a closer look, specifically in regard to whether we can include any element of cryptocurrency within our model portfolios. And so we, like Luke, well, not at the current time. I'm sure we can look to explore some of the challenges, Dan, but we have some significant concerns around all of the boring areas such as regulation, but those things that keep our areas of business safe. We've worked so tirelessly as an industry to professionalize and bring our business up to a very high standard. And we've been through the pain of RDR, of depolarization, of MCOB regulation, and it would be a real shame to take retrograde steps given all of the significant improvement we've made. So challenges around volatility, challenges around ethical cleanliness of the mining of the data and the realization of the actual cryptocurrency, and the volatility and regulation would be the two biggest barriers that we see as a business at the current time.
Okay. Luke, can you help me out with a question from one of the advisors that's come in? And it's come in from Alan Lazenby, who I will say, Alan, I did see your questions on the last session. I just couldn't quite get them in there. But Alan's asked, can you invest in nodes rather than the coins? Luke, I'm hoping you know what that means, because it means nothing to me.
Yeah, so what you can do is that instead of investing in the assets, like you would invest in gold, you can invest in the shuffle. Basically, you invest in an infrastructure that helps to operate the network. So yes, you can do that.
So by that, you would be investing in. Give me an analogy there that would work from regular investing world.
Yeah, so I think the best example that I can think of is, instead of being a gold digger and trying to go look for gold, you're going to sell the shovel and the equipment to people who are going to go look for gold. Right.
Okay. Interesting. And do you think, have any more fundamental security to it, or answer any of the concerns that Justine and the team at Tatton have raised when looking at this market?
I think it's a different way of approaching this market. You just, instead of focusing on an asset which is fairly volatile. You focus on the infrastructure that underlies it. Now, you could make the case that maybe many cryptocurrency will not make it through this winter, but what is going to stay is the underlying infrastructure. There are plenty of cryptocurrency. We mentioned Bitcoin, ETH. Lot of platforms have been built over the past few years, and those platforms, they're going to serve as the underlying infrastructure, like the operating system on which different applications are going to be built. So the idea of investing in the infrastructure instead of the asset themselves can make a lot of sense. But ultimately, this is a diversified play on a similar topic.
Interesting. John West's been in touch. He says, if you were a practicing advisor dealing with a client investing in cryptocurrency, would you be happy if they said they'd like to pay you with cryptocurrency? Hey, let me flip that one on its head, Justine. Would you be happy if somebody wanted to pay the fees for Tatton's discretionary investment service in cryptocurrency?
That's such a great question, Dan. And I think it brings us back to the very essence of principle of operating as a financial advice firm today. We have seen a huge rise in the use of advisor-led platforms. And we, of course, depend upon those platforms to run our model portfolios efficiently. And I think a lot of advisors, just like us as an asset manager, are a little bit hooked on platforms. They give us great ability to scale and deliver fantastic service. So I think before we could consider including crypto in model portfolios, or indeed using it to facilitate our DFM fee, we would need the crypto asset to be available as a digital currency on advisor platform. And I think, as Luke said, we are some significant way away from that, not just from a regulatory perspective, but also in terms of the reality of being able to trade and have real-time tradability of crypto assets. That's one of the other challenges that we have, let alone the consistent valuations and the ability to compare and contrast the many thousands of different varieties available. So giving you a very direct answer, Dan, not at the moment, thank you. Okay.
Luke, what do you think the key steps from a regulatory perspective are? What do you think the regulator in the UK in particular is going to be looking at?
Well, look, you mentioned the UK, so we work closely with the local regulator to help understand what they think and for them to help understand what we are working on. So it's a regular dialogue. And I would say the first step, which is the same step for any individual or any entity that would like to move into this space, is the educational part. I think the aspect of suitability, you mentioned volatility is a big topic for cryptocurrency, which is pretty normal given how nascent this asset class is. But the main part is to be able to understand what's happening. If you think, maybe you asked me for an analogy, anybody after a certain age is allowed to drive a car, right? Pretty much anybody. But you would not be allowed to drive a car if you don't have a license. And I think we should be approaching this space in a similar fashion. The aspect of suitability, I think for me, the critical one is to understand what's happening. And to go back to the analogy of driving, you don't necessarily need to understand exactly how the engine works, but you need to have an idea of what are the rules and what are the fundamental guideline when it comes to driving a car, so that you don't hurt yourself and you don't hurt other people.
That's interesting. Carry on. Yes, just.
Sorry, Dan. I was just going to add that we've seen very early steps from the regulator to actively engage in this space in the UK landscape. We've seen some closer look through consultation papers, particularly at financial promotions of crypto businesses in the UK. The outcome of that we'll see later this year. But as Luke has alluded to, the biggest challenge at this moment in time is we just don't know where these companies are. They are unknown and unidentifiable. So it's a little bit like a gun amnesty. You're asking everyone to come above the parapet and say, hello, I'm here, and give people a mechanism to sign up to some form of framework, so that firstly, we know what we have within our community. And then secondly, we can apply some standardized terms and try to agree some degree of infrastructure. A little bit like the ethical market. If we rewind 5 years, the rate of growth and development that we've seen in that space has been absolutely phenomenal. Yeah. And yet we still struggle with standardization and comparing and contrasting alternatives there. So we have, I think that's the best analogy I can give. To see the huge meteoric growth we've seen there, we're likely to see the same, but many years worth of structure still to come.
If I can just jump on that, because Justine mentioned an interesting aspect, is there is the challenge of understanding how the technology works. There is the challenge of understanding how the ecosystem works. And there are still plenty of valuation model that are running around, and nobody is very clear which is the exact one. But there is also under that the challenge that we're talking about, a different type of way of making decision, this aspect of decentralization. So instead of having one single entity that rule or organize all the transaction, it's a decentralized. That's the whole point of cryptocurrency, this decentralized. So from the point of view of regulator, it's quite challenging to establish rules and way of assessing those companies, because they can be exploited, right? If you think of fairly advanced investment vehicle that we're probably going to see in the near future, decentralized autonomous organization, you might have heard about them, DAOs. They don't necessarily have anybody that is responsible, right? It's a group of people, it's a community that make decision. There are certain rules, but it's not one single person that the regulator can go to and say, okay, explain me what's happening. So there is a big challenge in also adjusting to this new business model. And that we see that with cryptocurrency, but very likely, again, the infrastructure is going to perspire into other aspects of the economy, away from capital market into other industries.
And you touched on a couple of things there about, the infrastructure of it and the understanding of what's happening, but then the whole point of it being decentralized, being that it can be quite opaque. Mike Butler's sent a question, and he's clearly been listening to the same podcasts I have. He says, with OneCoin proving to be nothing more than a Ponzi scheme, has this damaged the cryptocurrency marketplace? Because all of those issues that you've said that a regulator might be looking at were all apparent in OneCoin with what it set up, which was to say we're a cryptocurrency, and it turns out that it's not, because because you can't touch it, you can't grab it, you can't see whether or not there's a blockchain underneath something, can you?
Yeah, so two things. You touch on the aspect of opacity or transparency and on the Ponzi scheme. So with regard to opacity, so I think the coin that you mentioned is the Terra Luna. That has been effectively quite a special case that has shocked the whole industry. People are still doing a bit of the post-mortem, exactly what has happened and how we could be preventing this. But moving to the second topic about Ponzi scheme, look, cryptocurrency or digital asset, generally speaking, is no different than other industry in the sense that at the very beginning, it is a bit messy because everybody is trying to figure out what to do, how to do it. Regulators are looking around, say, okay, how can we regulate this? And there are people who are going to try to benefit from that. And there is nothing specific to cryptocurrency or digital asset that we haven't seen in the real economy. If you think of the biggest scandal, Enron, to name one that was born around the time where Bitcoin came around, they have existed in the real economy as well. So not surprising to see this happening in this fast-growing environment.
Okay. Luke, Justine, thank you very much indeed. A very good brief overview of all things crypto that's happening at the moment.